Bitcoin's going to go up because capital is going to be created by technology. And as the world gets richer, the capital is going to have to find a home. And Bitcoin price is going to appreciate because there'll be more currency, more dollars, more pesos, more rubles, more everything. And the price is going to appreciate because people are going to sell their 20th century physical assets and financial assets and the like in order to buy digital assets. If Bitcoin goes to $13 million a coin, then Bitcoin will go from 0.5% or 20, 30 basis points of the world's capital assets to 13% of the world's capital assets.
Bitcoin could eventually capture up to 13% of the world's capital assets, and that would push its price into multi-million territory. That's the latest message from strategy executive Michael Saylor. According to Saylor, the system is rebalancing. Fiat is multiplying, legacy assets are losing ground, and digital scarcity is becoming the most trusted store of value. Bitcoin is now becoming the foundation for long-term capital, designed to outlast governments, companies, and even entire economic systems. The best part is, it's only the beginning. Make sure to stick around until the end of the video, as Michael Saylor breaks down exactly why the smartest capital on earth is Bitcoin.
Because if you think about money, money decomposes into currency and capital. So if you live in Argentina, and by law, you're required to pay your tax bill in pesos, you're going to need ARS. You're going to need local currency. And if the currency is losing 20, 30, 40% of its value a year, then you would hold that for 4 weeks. Then if you needed money for the next 4 weeks to 4 years, call that midterm money, you'd probably want to buy the dollar. So you would have in your checking account USD. You wouldn't hold Bolivar, you wouldn't hold Naira, you wouldn't hold any of the really weak collapsing currencies. You wouldn't hold any Syrian or Afghan or Iraqi currency. So in that case, you always want to hold the US dollar. But if you need to hold the money from 4 years to 400 years, there is no institution or wealthy individual that would ever claim that the majority of their assets are held in dollars or pesos. They're holding capital assets. And those capital assets are split between 3 things. They're either holding bonds. You might be holding corporate bonds. You might be holding treasury bonds. Or they're holding real estate. You're probably owning a building or property or a home or some other tangible physical asset. Or you're holding private equity. I own a company. Or public equity. I have a portfolio of Magnificent Seven stocks or S&P index or something. So think about all the wealthiest people in the world. Elon Musk, Jeff Bezos, Mark Zuckerberg. What percentage of their wealth is US dollars? It's not even 1%, right? So Bitcoin doesn't compete with the dollar. Bitcoin competes with capital assets in the world, right? And there are $450 trillion of those capital assets. So think you own a Nigerian warehouse. You own 1,000 acres in Siberia. You own a private portfolio of Chinese stocks, right? You own a bar of gold, right? Why do you own these things? Because you had to put your money somewhere. So Bitcoin is replacing or competing with those things. If you look at the M2 money supply, I think the US dollar was showing as like 13, maybe 17% of that. And the primary competitors of the dollar are CNY, Euro, and JPY, Yen, Euro, and Chinese currency. So as the stable coin, as the digital currency backed by the dollar starts to circulate, that number is going to go from 17% to 30%, right? And what we're doing is we're really competing with other world currencies. And then the Bitcoin asset is less than 1%. And as it grows, if Bitcoin goes to $13 million a coin, then Bitcoin will go from 0.5% or 20, 30 basis points of the world's capital assets to 13% of the world's capital assets, it will still compete with real estate, equity, and bonds, but it will emerge as like a monetary index for long-term money. Bitcoin is special because it's an asset without an issuer. And why would you want an asset without an issuer? Because you're a company that doesn't want to trust any other company, or you're a country that doesn't want to trust any other country, or you're a saver that wants to store your money for 200 years, and you don't expect any company to last 200 years, and you don't expect any government to last 200 years. You just want your family to be rich forever. And so Bitcoin appeals to the people that want immortal capital. And you can see if you lay out this taxonomy, there's 4 quadrants. You need them all. You need short-term money in order to make payments. You need tokens to create capital. You need to tokenize securities, because otherwise, how do you innovate or create more efficiency in the world capital markets? And then you need a commodity to store and protect your capital. And once you see all 4 of them, you realize they should all be designated as new asset classes. The rule ought to be the issuers have an obligation to not lie, cheat, and steal. They're responsible for the damage they do. The exchanges should have the ability to trade these things at the speed of light with anybody or anything, any machine. And then they should have obligations. Don't lie, cheat, and steal. Don't assume a conflict of interest. And then the holders ought to have a right to self-custody. You ought to be able to own your assets, custody your assets, and transfer your assets freely. So I think that what we all agree with is there ought to be no AML, KYC frictions on asset transfer, because that destroys the utility of all these digital assets. And to the extent that you want to enforce consumer protections or investor protections, you should put the obligations on the issuers. And that way the economy starts to grow very, very rapidly.
Michael Saylor breaks money into 2 buckets: currency and capital. If you're in a country like Argentina, you'll hold pesos just long enough to pay your taxes, maybe 4 weeks. For anything beyond that, Saylor says, you move into dollars. But if you're planning 400 to 400 years ahead, no serious investor holds dollars. And that's where Bitcoin comes in. It's an asset with no issuer, perfect for families, companies, or even nations that want wealth protection for generations. Saylor believes Bitcoin is not competing with just the dollar. It's competing with $450 trillion in global capital. Now, let's go back to what Michael Saylor has to say.
David Sachs, the crypto czar, went on the All In podcast. And on the All In podcast, he said unequivocally that the US government only recognizes one crypto asset as being decentralized. So what Sachs said was Bitcoin is a decentralized asset, a store of value. That's why it's in the Strategic Bitcoin Reserve. It's the only one. And so what you had was a member of cabinet responsible for digital assets policy, in essence providing very clear guidance that Bitcoin is a digital commodity, an asset without an issuer. And that's the policy of the United States and the President of the United States. And of course, the President directed that should come to his desk by August. He said, I want to see it by August. He's actually said in the first executive order, he said within 6 months, so by late July. But
so Michael, if I'm understanding this, you don't think any other cryptocurrency qualifies to be in a strategic reserve in the United States other than Bitcoin because of its decentralization and it has no issuer?
I think there's only one universally acknowledged digital commodity in the world.
Okay.
Right? There's only one. There's Bitcoin. I've said that, right? There is no second best. I've implied that and said that, and I've spent $33 billion based on that. So yeah, it was my view 4.5 years ago. There's one digital commodity. But Christine, there's a more important point here. Even if there was a second, third, and fourth. Like, let's take the fork wars, Bitcoin Cash, Bitcoin Satoshi Vision. Even if you fork Bitcoin and you maintain that's a commodity, they're all going to zero if the use case is store of value or cap or money, right? Because if you were to fork Bitcoin and claim it's decentralized, the free market is going to pick the strongest network and it's going to be monetized and everything else is going to zero. So it doesn't matter from a practical point of view. My position is not that you couldn't theoretically create another digital commodity. It's a very powerful financial lever. And the companies in the United States, like my company, they're capitalizing on Bitcoin. They're going to be worth $20 to $40 trillion just on their Bitcoin assets if they continue to capitalize. So understood as digital capital, Bitcoin is enriching the corporations and the government itself, depending upon how much Bitcoin those entities own. That's the first metaphor. The second metaphor is Bitcoin is digital property. If you think of it as gold or cheese, nobody rents their cheese or mortgages their cheese. But when you think of it as owning 100 acres in Manhattan, if your family owned 100 acres of Manhattan 100 years ago and you owned it this year, and I asked you, what's your family doing with it? How are you going to pay your bills? You wouldn't say, well, we're going to sell our property in Manhattan. You would say, we're going to rent it, we're going to develop a building on it, or we're going to borrow against it, we're going to finance it. And so you would generate billions and billions of dollars off of 100 acres of real estate in Manhattan without ever selling it. It's property. And so Bitcoin as property means you will be able to rent it, finance it, or build businesses on top of it in the cyber economy. That would be worth $10 trillion to the United States in 2045 each year, right? We could generate $10 trillion off of the digital property that the United States buys in the strategic Bitcoin
pay off
reserve.
The national debt?
Well, you wouldn't be a national debt. You would basically flip from being a net debtor to a net creditor, and you would generate yield.
A growing number of people see today's financial system as broken, rigged in ways that only benefit a few. That's one reason Bitcoin keeps gaining popularity. It offers something different, and more companies cannot ignore it anymore. Some are already adding it to their balance sheets, either through direct purchases or by using spot ETFs. Michael Saylor believes tech giants like Apple and Google could move quickly because they've worked with Wall Street for decades. ETFs make the process easier. These firms don't have to hold the Bitcoin themselves. They can still gain exposure without changing their entire structure. Bitcoin is already being included in government strategies and business playbooks. And according to Saylor, what we've seen so far is just the beginning. Companies that understand this early could end up with a massive advantage in the years ahead. Now, if you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.